Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we're diving into a semi-annual shareholder report, and I promise it's more exciting than doing your taxes, especially because we're talking about how a fund is trying to protect your investments, which sometimes requires a little bit of rocket science. So let's see if they made sense. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat more about it. Scroll Semi-Annual Shareholder Report, FTC April 30, 2025. Scroll 6 report gives us the inside scoop on the Soundwatch Hedged Equity Exchange Traded Fund, or ETF, for the 6 months leading up to April 30, 2025. We're going to try to understand what the fund invested in, how it performed, and what it all means for investors. Scroll costs paid as a percentage of $1,000 investment. Scroll. First, let's talk about costs. For every $10,000 you invest, the fund costs you $38. That's about 0.78% annually. This number tells us how much of your investment goes towards running the fund, instead of directly into your returns. Keeping an eye on this percentage is important because lower costs mean more money stays in your pocket. Now, let's look at some key stats. The fund has about $144.6 million in net assets. This is the total value of everything the fund owns, minus its debts. It's like the fund's financial report card. The fund invests in 7 different things. The portfolio turnover is 7 different things. The portfolio turnover is 0%, meaning the fund didn't really buy or sell its investments, and the yield you get is around 1.14%. Yield is how much income you earn from the fund, like interest or dividends. What's this fund actually holding? Most of the fund, 97.2%, is invested in the iShares Core S&P 500 ETF. This is like investing in the top 500 companies in the US all at once. They are also holding options and some cash for flexibility. Looking at their top holdings, we can see that they are very diversified. They mostly replicate the entire S&P 500. Scroll Semi-Annual Financial Statements. Scroll Semi-Annual Financial Statements. This section gives us a closer look at the fund's assets, liabilities, and how it performed over the last 6 months. Scroll Investments Consequently in Securities. At Value Scroll, the fund has close to $145 million in investments. What are the liabilities? They have a little over $2 million in liabilities, and net assets is what they own minus what they owe. Here it's around $144.6 million. Scroll Net Query of Investment Income. Scroll. Okay, let us see how profitable this fund is. If the fund's total investment income was about $904,000, almost $1 million losses, they ended up by reducing their net investment income. After some realized and unrealized losses, they ended up by reducing their net investment income. And after some realized and unrealized losses, they ended up by reducing their net assets by around $4 million. Not good force. They actually lost money. Scroll, beginning to after Scroll T, during the year about $900,000 were paid in distributions to shareholders. They also sold some shares for about $5.8 million. South net assets started at $143.6 million and ended at $144.6 million. Now, let's review a table of financial highlights. This table gives us the details of the fund's performance year after year. Scroll Net Carve Ken Investment Income. Scroll in 25. Net investment income per share was 9 cents, 0.09. In 2024, it was 20 cents, 0.0, and in 2023, it was 30 cents. So looking at and in 2023, it was 30 cents. On looking at the total return on net asset value, it was negative 2.63% in 2025, the fiscal year we are talking about. The expense ratio also changed over time, 0.8% in 2025, 0.82% in 2024, and 0.6% in 2023. Is basically how much it costs to run the fund. The cost seems to be slowly increasing. It is important to understand how the fund is structured. The Soundwatch Capital, LLC, is the investment manager to the fund. The investment objective of the fund is to provide long-term capital appreciation. The fund is basically trying to make your money grow over time. The fund issues and redeems shares on a continuous basis at their net asset value, and only in aggregated lots of 25,000 shares. The shares of the fund may only be purchased or redeemed by certain financial institutions. At authorized participant, this detail clarifies who can directly buy and sell shares. The fund follows accounting rules accepted in the United States. Wyeth investments are valued based on market prices and are grouped into 3 categories. Level 1 uses prices from active markets, Level 2 uses observable data, and Level 3 uses unobservable data, which involves its own assumptions. The fund invests in derivative instruments such as equity index and or ETF call options, systematic selling, covered calls and option spreads to generate additional income. A portion of the proceeds is used to systematically purchase a series of protective equity index and or ETF put options or put spreads to reduce the negative impact of stock market declines. Scroll federal income to also taxes scroll. The fund qualified to be taxed as a regulated investment company. Therefore, it doesn't pay federal income tax because it distributes its gains to the shareholders. The fund pays the advisor a monthly fee based on the average daily net assets at an annual rate of 0.60%. The advisor has agreed to pay substantially all expenses of the fund. The report also gives us information about the fund's transactions, how much they bought and how much they sold, cash versus in-kind. At the end of fiscal year 2024, they had around $54.49 million in accumulated gains. These numbers are relevant for tax purposes. Approval of investment advisory agreement with Soundwatch Capital Theft. They review the fees charged by the advisor, the performance management and the profitability of the advisor. The board has to periodically evaluate the advisory agreement. Scroll changes, Kissen and disagreements with accountants scroll. There were no disagreements with accountants. Alright, that's our breakdown of Soundwatch Hedged Equity ETF. Let's put it all together and see what we learned. The fund's core strategy of primarily investing in the iShares Core S&P 500 ETF provides broad market exposure. This is good if you believe the entire market will grow. The fund uses complicated derivatives to try to make more money and protect you from downsides in the market. The board of directors approved the investment advisor analyzing the benefits and costs. The negative side is that the fund actually lost money, and the numbers show it. And the financial highlights shows the fund is underperforming, but that is just for 6 months that the expense ration is slowly increasing, which isn't good for investors as it starts eating into the profits. Taking into account the fund objective is long-term appreciation. The fund is currently underperforming, but we will have to see if it can come back up. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Check out the Discord channel in the description if you want to discuss this further. Thanks for watching. See you next time.